Hi and welcome to the Market Alert for Friday, the 14th of May 2021. Well, what a day yesterday was. Stocks surged, crypto crushed, commodity fever breaks as lumber slides for third day. Another day where little made sense, and it certainly did as far as the stock market is concerned, except if you always keep in mind they want the market to stay on the highs. And they did a beautiful example of this yesterday. It was textbook, which we'll look at in just a moment. No surprise or whatsoever. No panic, market surge as transitory inflation narrative reasserts itself. This changes nothing from the Fed's view. The Fed is focused on the labour market, believing that any transitory inflation can be weathered by consumers, i.e. they will take no notice that the fact that most items have gone up in price and just carry on spending when things have increased in price and they have less money. But there you go. And of course, I can't disagree with the Fed when it says that it's transitory. Of course it is. It always is. At some point, it stops. But that doesn't mean to say that it can't stay for a long time before it actually stops. Gold's recent headwind shifts to a tailwind. Dr. Copper would seem to suggest the gold price could be significantly undervalued at present. Of course it is, based upon inflation and the amount of debt they're printing. It's just the derivatives market and the bankers are able to actually suppress the price, where in the physical real world, if there were no derivatives, the price of gold would be significantly higher. So, talking of things getting crushed, well, the implied volatility did yesterday because of the turnaround in the market. 16.53 down from 19.11 on Wednesday. Incredible, but still above the 20 bar moving average as prices recovered. Now, I don't know whether the central banks colluded yesterday and brought the market back, but there was certainly a concerted effort globally in order to do this. Let's start off with the Dow. We can see there yesterday brought all the way back from Thursday's sell-off. The market was weak, as we saw yesterday in the market alert, and then by a couple of hours into the morning session, the market was turned around and brought back. These are the upside targets for the Dow. The market's back above the 20 bar moving average, just sitting at the 5 bar in the daily at the moment. Meanwhile, in the DAX, which was the star yesterday, that's for sure, we can see that price is trading down to 14,828, which was this low, traded just below. They brought the market back. I'm going to get into this in more detail when we look inside of yesterday's events. But bigger picture, the market closed above the 20 bar and the 5 bar, and now is heading to the 78% retracement, already closing above the 62, which is, I've taken off the chart. 89 will be crucial if the market continues to move higher, because you'll end up with the same situation as we did here, where the market, I'll just change the colour here, where the market moved down and then traded back to 89, and now you've got a situation where down and back potentially to 89 as well. But certainly volatile there at the moment, as we can see. But as I say, true to form, somebody sent the memo out, let's get this thing turned around. We can't have this moving lower. So overnight prices have been sort of up and down. It's been volatile. You see up, down, back 89% down, back up again, retracement to here of 89. This is the high of yesterday, where the market's banging its head back down, back to 78.89, back down below this low. But here again, you can see back down, retraced to 89, 78% retracement. And then same thing here, back, and then we drive through yesterday's high. Interesting to see this happening overnight. Prices banging the head against the 15,300 level there, and just sitting above the high at the moment. Let's just compress the chart, see what this looks like. It's going to be a big DP on this one. There you go, because of the range of yesterday, which was something like 450 points if I recall. So long way down to even the DP if the market fails to hold at the highs there. We're 200 points down to the DP. To move up to anywhere in the R1 is 150 points, 250 to the R2 as well. So big range for yesterday, which does screw up any sort of average for yesterday. So again, you just have to play this market. The high, the 200, closed below the 200, and yesterday's close is going to give the indications to the downside. On the upside, I would have thought the R1, which is 16,411. Let me just reset this chart so we can just see this a bit more clearly. Gosh, it's so the range of yesterday to actually try and get anything on the chart is going to be a tough one. We'll have to use the psychological levels to begin with as areas of support and resistance. But we're looking at 15,411. 15,411, so that takes you to 89 on the R1. So that will be an interesting area should prices continue to move to the upside. So in the metals for yesterday, let's have a quick look. Silver managing to hold and still managing to hold overnight as well. Like I say, it'll be the prophet of doom, but I'm just not used to seeing this being held up, especially after yesterday, where they had the ideal opportunity to really tank this market and sell it off sharply to buy back at a lower price, and it wasn't taken advantage of. So maybe it is a bit stronger, who knows? But at the moment we can see prices finding support yesterday and an increase in volume as well there, coming off the lows. Not too dissimilar from the day before when we had the market moving lower, so could be a bit of support there. Starting to look like here we go. Here's the classic. Let's just shake it out and bring it back. It doesn't take long. You'll see this all day long in the silver market, so they're trying to bring the market back above the DP, which is good. So yeah, let's see what happens, but it's still way undervalued. Meanwhile, in the dollar, we had the market moving up yesterday, and again we've got this situation where we can see that the volume in this bar is at least 85-90% of the previous day, as we saw the shorts taking profits, and now a bit of weakness coming into this market as well. So I'll be inclined to keep an eye on the dollar from this low to this high, and so I'll leave that in at the moment, all of those fibs, just to see where the market will come back to, and if it does, then it should move the silver price to the upside. Meanwhile, gold also yesterday, a very interesting bar there, if that's the correct bar. It is. Prices reversing and being brought back there from yesterday. So again, gold holding well given the situation of yesterday, where they had the ideal opportunity to slam the price. So let's have a look in detail at yesterday. The market was weak when I was recording the market alert because it distracted me, which I brought to your attention. And I also mentioned the S2 yesterday as well. This was the kickoff yesterday as the market started to move lower, and then we started off. The French and German had a holiday yesterday, but that didn't stop the market from being sold off. We went straight through the low there, which you can see, a lot of volume, and we've got a bit of a bounce. Prices finding support. This was an interesting bar, how prices came back and then failed. You can see this here with the increase in volume, and then as soon as we broke the psychological level there, prices moving lower. A bit of a bounce back to the BRN, and then we traded to the S2. And I'm just going to fast forward here. We went slightly below it by 50 points, but you can see how that 20 bar moving average there just held. And now, if I can get the chart to stop in the right place, there you can see that we'd gone through 89, and then we were looking at this area, which was 828. And I drew this on the chart, and this was incredible because I'm just going to draw this in for you, because this is, take note of the actual range, because the market, when it got to this in the daily chart, it stopped. It just stopped and it held. And you can see this as it went on for quite some time. And again, I keep going back and checking, making sure, thinking, well, if this breaks, then we're heading down to the 14,660. But it wouldn't break. It just held there. We came back down, and then we had two sort of sideways moves. We had this one followed by this one before the market actually braked and moved to the upside. So there we see, this was the interesting bar here when it came back and tested, and that was the end. It had been trading sideways, low volume, and all of a sudden they spiked back down to 809 and brought it back immediately above the 818, which is the orange line that I drew in, because I wanted to see how the market would sit and react at this level. And then the memo was sent out, and that was it. 50 points to the 78% level, and then the market traded sideways, managed to break through a bit, but then I assumed that the market would have a break, rest, and move to the downside, but no. It continued all the way through, back up to S1 through the morning, and then when we got to that was the weekly jobless claims. They were better than the best they've been since the COVID crisis, but even 16 million still on the dole, as we would say in the UK, and up to the DP. And then when we opened, we went through the DP, and I was chatting to a friend. I said, we're going to the high then. They've got to finish this job off, and certainly that's what they did. It took a bit of getting through the 15,200 level. It was very choppy through here, not pleasant at all, but eventually the market broke to the upside, to the R1 and the high, and that was game over for the time being. And then, of course, it continuing to move higher overnight. So let's just have a quick recap. That's the Dow, that's the DAX. Let's just have a look, see where we are. We're still starting to holding on the upside at the moment, still above the high, which we can see there, and the 200 MA. We'll need to take out the high to the left if we're going to see prices move to the upside. Futures opens in 15 minutes time as I'm recording this. But yeah, just a quick look at the daily charts. We've got that 78 and the 89. Keep an eye on that 89, because that's at the R1 for the pivots for yesterday if the market moves higher. Now, of course, they could quite easily switch this and send it back down as well. So be aware anything that sparks it. But we know that the odds are that they will generally bring this back now, particularly after yesterday. It is just an absolute stunning day. And the whole range for yesterday, I'll just do a quick calculation here. Just a quick ballpark. It was 460. Yeah, I thought it was 450-ish. So, yeah, there you go. Okay, that will do it for this one. It's the weekend, so have a good weekend. And all things being equal, I will see you on Monday. So have a great weekend. And as ever, thanks for watching. See you in the next one.